Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of July 17th. Well, second quarter earnings season started late last week, and it picks up in earnest this week. Second quarter earnings season refers to the period where companies report results for the second quarter, so from April 1st to June 30th. So today we'll discuss why earnings are so important to the stock market, what investors expect in the second quarter, and why earnings in the second quarter could be a little bit better than expected. So why are earnings so important? So if you go back to Investing 101, we learned that earnings drive stock prices. It's a theory and there's other factors, of course, but investors base their future value of a company on its expected earnings. So for example, if a company's earnings are better than expected, the value of a company may rise, and in theory, its stock price increases. The opposite may occur. The stock price falls if a company's earnings are worse than expected. Looking at the second quarter for the S&P 500, analysts expect earnings to decline 6.88% from a year ago period. If that number does come to fruition, it would mark the largest decline for the S&P 500 earnings since the second quarter of 2020. If you look at this graphic, and we grab this data from FactSet, and let's leave this graphic up here for a little bit. Let me explain what you're looking at. The first column shows each sector of the S&P 500, like energy, financials, technology. The second column shows the estimated earnings for the second quarter for each sector. So for example, energy's earnings are expected to decline 50.22% in the second quarter from a year ago period. The third column shows earnings for this year. Sticking with energy this year, earnings are expected to fall 28.97%. The takeaway from this graphic, generally earnings estimates are under pressure for most of the economically sensitive sectors like basic materials and energy. So what could happen to earnings this quarter? In our opinion, earnings could be a little bit better than these initial results. Why? Let's just start with the math. So these are estimates that you're looking at, and these are estimates as of near quarter end. In this case, as of July 14th. They're likely to improve as estimates are being replaced by actual company results. Why is that the case? Well, according to FactSet, over the last 10 years of quarterly results, 73% of companies have exceeded estimates in their earnings. In calculation for quarterly earnings, estimates get replaced by actuals. So if the 73% average holds for this quarter, that in theory means 73% of companies are beating estimates, and 73% of these estimates are being replaced by higher actual results. I know we're getting into the weeds, but this is so important that earnings could be a little bit higher than expected given the math. Beyond the math, there's lots of tailwinds, potential positives for earnings. You know, we saw a bottoming process back in March, given the banking crisis, but since then, we've seen monthly improvement in data. For example, March and April, we saw was basically the low point in business activity, but this is followed by a better May, then a better June. Also, margin pressure, profit margin pressure may begin to be abated a bit. You look at this chart. This chart shows PPI, the producer price index, relative to CPI, the consumer price index. These are pretty much proxies for business costs and consumer prices. You're seeing these widen. In other words, PPI, business costs, producer price index, is falling at a greater rate than CPI. This is better for profit margins, which equals possibly better for earnings. The key takeaway in all this in today's video, in theory, earnings drive stock prices. Second quarter earnings season began last week, but picks up in earnest this week. We do expect earnings to be a little bit better than expected than current estimates. With all this said, though, listen to company management, what they're saying about future business and economic environment. Thank you for listening. For more information, please follow us on Twitter at Cetera IM, and see you next week.